All right, let's just dive right in. So, on the surface, Tesla's latest earnings call seemed, well, kind of underwhelming. The numbers weren't exactly setting the world on fire. But here's the thing, if you were only looking at the numbers, you probably missed what might be the single most important announcement in the company's entire history.
And that's really the central question we're unpacking here. Was this just a lukewarm report from a car company that's dealing with slowing demand? Or was this the moment Elon Musk finally told the world, hey, we're not really a car company anymore, signaling a massive pivot that could change, well, everything?
To really get the stakes here, you have to look at Tesla's history. See this number? 33,500%. That's the company's total return since its IPO. You know, the big money has always been made when the market gets Tesla wrong. And this earnings call, it might just be the biggest misunderstanding we've seen yet. Okay, so to get to the hidden story, we first have to understand the one that's right there on the surface, the one that Wall Street was obsessed with. This is a story all about spreadsheets, quarterly targets, and what the company did last quarter, not what it's building for the next decade. This slide just perfectly nails the two competing narratives. So on one side, you have Wall Street. They see the headline numbers, stagnant revenue, what looks like declining demand, and they immediately start worrying about near-term car margins. But if you dig deeper, a totally different story emerges. One about a conscious pivot toward a long-term monopoly play with literally zero focus on cars. It's wild. Two completely different stories from the exact same event. So now, let's look at that story, the one that's hiding underneath all the numbers. This wasn't a call about selling more cars. This was about building a whole new company. I mean, this was hands down the first ever 0% automotive earnings call in Tesla's history. Elon Musk wasn't on there talking about how many cars they're going to sell next quarter. No, he was signaling a fundamental strategic shift away from being just a car company and toward a future driven entirely by AI. So what does that future even look like? Well, it's built on four huge pillars that make up the next big growth curve for the company. We're talking about the full self-driving and robotaxi ecosystem, the mass production of the Optimus robot, meeting what they call unlimited demand for energy, and of course, building the massive AI infrastructure to power all of it. And this isn't some far-off dream. The call actually laid out a surprisingly concrete timeline. In early 2026, they're discontinuing the Model S and X. By the middle of that year, the Fremont factory is converting to make Optimus robots full-time. And by the end of 2026, production on the Cybercab is set to begin. I mean, these are real, tangible steps, and they are happening really, really soon. Okay, but a pivot this big is going to cost money, a lot of it. So how do you possibly finance a complete corporate reinvention? Well, this brings us to the business logic behind the whole thing, what's being called the cash cow strategy. And here's the crucial number, $20 billion. That's what Elon Musk announced as the capital commitment for 2026 alone, just for AI and infrastructure. This right here proves the pivot is real. I mean, come on, you don't commit that kind of capital unless you are deadly serious. So this strategy is actually pretty simple. The car business isn't the main goal anymore. Instead, it's being used as a cash-generating engine, a cash cow, to fund the massive investments needed for that next chapter in self-driving, robotics, and energy. This quote really just sums it all up, doesn't it? The profits from selling cars today, that's the fuel for building the monopolies of tomorrow. The car business has become a tool, a means to a much, much larger end. So here's the blueprint, laid out plain and simple. Step 1, the car business generates billions and billions in cash. Step 2, all that cash gets funneled into the big pivot. Step 3, that investment builds a dominant, maybe even an uncatchable lead in these brand new markets. And the final goal? Well, a future monopoly. Now, of course, a strategy like this means there's going to be some short-term pain. Discontinuing popular car models, letting your margins slide, it creates a lot of discomfort. But that's kind of the point. That discomfort is a sign of aggressive investment in the long term. And look, a pivot of this scale is incredibly risky, and that discomfort is very, very real for investors who are just focused on the next quarter. So what does all this mean for Tesla's future value? I mean, if it's not really a car company anymore, how do you even begin to analyze it? This is all about learning how to value a completely new kind of company. Okay, this is probably the most powerful analogy to help you understand this whole shift. Stop thinking about the car as the product. The car, it's just the printer, a one-time hardware sale. The real, long-term, high-margin profit comes from the ink, the recurring software revenue from full self-driving subscriptions. So, why is Tesla in such a unique position to pull this off? Well, it has this one of a kind combination of ingredients that pretty much no one else has: the cash, the top tier AI talent, deep expertise in batteries, motors, vision. They've mastered production, and they have a CEO who's willing to bet billions to make it all happen. Now, just having the ingredients doesn't guarantee a Michelin star, but the argument is that no other company even has all the pieces on the board. And if this massive bet actually pays off, the potential outcome is just staggering. These are some of the price targets for 2030 and 2035. Even in the bear case, the one that assumes there are major challenges, it's still a massive potential increase. And the bull case? Well, that's where things get really transformational. And that really brings us to the final critical question that this whole thing leaves us with. When you look at a company like Tesla, do you value it based on its current, messy, uncomfortable pivot? Or do you value it based on the radically different future it's spending billions and billions of dollars to build? That right there is the multi-trillion-dollar question.